lever as well. Anand Shah, head of PMS and AIF investments at ICICI Prudential AMC, is with us now. Anand, thank you very much for joining in. So first things first, we are bang in the middle of earnings season, right? And so many large companies reporting. What do you make of the way the market's reading through numbers? I mean, I'll take Kotak Mahindra Bank just as an example, not to get your view on the stock. I know you don't talk too much stock specific. But the market seems to be in the mood for wanting more. It's like ye dil mange more. I mean, Kotak Mahindra Bank comes out with net interest margins of 5.5%, and yet the stock is down. Now people are talking about treasury gains boosting the PAT, etc., etc. I'm just trying to get into the market psyche at this point at 19,500 plus, and the way we're seeing reactions come into these big earnings. What's your thought?
Hi, very good afternoon. I think this time around, and it's not about today or last quarter, but all along last 2 to 3 years, we've been seeing that market's been frankly very demanding. If you see the entire rally, and we've been talking about markets at new high, if I go back into, say, 18th October 2021, when we touched the previous peak, or even before that, market's been only chasing earnings. And at every high, at every new high levels, or after every rally, market is questioning whether this is sustainable. Now, be it banks, generally banks, or now more recently we've been talking about chemical companies. Everywhere, if there is no earnings momentum, if on the contrary, if there's a earnings degrowth expected in times to come, market has been not giving a very free run. So I think in a way it is very good. In a way, this is not the market which is ready to buy into any sort of a story or in any sort of if there is a very strong few quarters of numbers, people are not really extrapolating it into an Excel sheet and saying next few years looks very good, let's go ahead and buy it. So I think it's a very good market. It's debating all the earnings and expecting that if the earnings are good, then obviously they are also rewarding the stocks that you can see as the markets are touching new highs.
Hi Anand, good afternoon. Anand, I want to ask you about the metals pack, because I'm just looking at your portfolio and you have the big boy Tata Steel in there and a smaller name, Godavari Power and Ispat, which I'm guessing you're holding it for a while, which would have done very well for you. What's your view on metals from here on? The street is a little bit skittish. We saw JSW Steel, they came out with a blockbuster set of numbers, but the stock has got sold into. So that Chinese problem is still weighing on sentiment. Your view?
Indeed, I think more of the same. I think market is saying, look, while the numbers look good today, how is it looking next quarter and the next year, and what sort of visibility is there for all these numbers? And as you rightly said, look, China accounts for a significant demand as well as supply, more importantly demand. And for last 6 months post the COVID recovery in China, we were expecting that the economy will pick up pace, some real estate should pick up pace, and the market is disappointed. The demand is not picking up while the production was higher. So what you eventually saw was significant supply, significant of exports from China, which is not allowing steel prices to actually go up. And obviously what we are seeing is year-on-year lower numbers. My take is, I think the worst seems to be over for the sector, but what markets and generally investors are asking is how good is the good, and to that extent it's yet to be seen. We will have to keep on an eye on China and how we will have a Politburo meeting in coming week and see what they can do to first help their own real estate and see if there is an uptick in that metals demand in China. That would be quite a key question for which the answer is required.
That's Tata Steel. Anand, I noticed in your contra portfolio, you have HAL, which of course would make all your investors extremely happy, I'm sure. I think you own just under 4% of it, if I'm not mistaken. But, let me ask you, what have you made of the manner in which defense stocks have shot through the roof? And hand on heart, right now, when you look at valuations versus the opportunity, I mean, Does that equation still make sense? Would you be comfortable, say, adding on to your positions in the defense space, given the current pricing?
I think we've seen in quite a few of our companies, we have seen this phenomena when actually the value stocks, and as I call value stocks, the state-owned companies, be it in defense, be it in banks, everywhere, have been fairly underpriced historically. Now, when actually you see growth coming through in many of these value stocks, you not only get one round of boost because of the growth in the earnings, but then obviously there's enough and more room for the PE rating. So I think even after a sharp rally, many of these companies, while obviously they are far more expensive than what they were before, but if you have some visibility of earnings, you have some visibility of the growth, they're not like significantly outpriced. Coming back to many of these new industries, and particularly we've been consistently talking about manufacturing-led recovery for the Indian economy as well. Manufacturing is one missing link. While we did very well in IT services, we do very well in financial services. Economy has been able to create jobs in services, but manufacturing was something we had not been very successful. More recently, we are seeing markets having quite a lot of interest in manufacturing in general, defense in particular. But obviously, the ancillary industries like cap goods, industrial products, and more recently, power, I think we are seeing quite a lot of excitement. So I think early days, as market has been keeping an eye, we are also keeping very close eyes to what are the market prices, the stock prices are reflecting, and whether they can able to deliver the same. So I think it's a cautious view here on the entire market. There has been a sharp run in many of these companies and sectors, and one needs to be very careful, very, very careful, given that the rally is quite sharp and earnings generally takes a little longer, and at times they don't deliver on the earnings also.
Okay, Anand, good hearing your thoughts on that cautious note. We'll thank you for joining in and talking about a couple of sectors, and we look forward to having a chat with you rather soon. By the way, before we go into that break,